in a move signaling an unprecedented acceleration in the convergence of traditional finance and blockchain infrastructure. JPMorgan Chase has officially launched JPM Coin, its digital deposit token, now integrated into Coinbase's Layer 2 network built on Ethereum. This initiative is far more than another tech experiment. It represents a structural transformation in how the banking system manages liquidity, settlement, and real-time cash operations. Unlike traditional stablecoins which, though pegged to the US dollar, operate outside bank balance sheets and lack direct backing from regulated institutions, JPM Coin is fundamentally different. Each token represents a real US dollar deposit held directly at JPMorgan under strict regulatory oversight and with full immediate liquidity. More than just a digital currency, it is a tokenized version of a traditional bank liability, now enhanced with native Web3 properties, programmability, interoperability, and 24/7 operability. One of the most significant innovations is that JPM Coin can generate yield, something unthinkable for generic stablecoins. This is possible because the underlying deposits remain on the bank's balance sheet, enabling JPMorgan to offer competitive interest rates aligned with market conditions directly to token holders. For institutional investors, especially corporate treasuries, asset managers, and hedge funds, this provides a secure, regulated, and yield-bearing alternative to idle cash parked in traditional accounts that often deliver near-zero returns. Operationally, the impact is transformative. Cross-border transfers, interbank settlements, and corporate payments that once took days requiring multiple intermediaries, high fees, and operational risk can now be completed in seconds, any time of day, at marginal cost, and with full traceability. This efficiency doesn't just cut cost, it also frees up capital trapped in nostro-vostro accounts, increasing the overall productivity of the financial system. By choosing Base as its deployment network, JPMorgan is making a strategic bet on scalability, security, and mass adoption. Base, developed by Coinbase, with support from the Ethereum Foundation, already hosts millions of users and thousands of decentralized applications, dApps. By integrating its token into this ecosystem, the bank, ESNT, just launching a private asset, building a bridge between the closed financial system and the open world of Web3, paving the way for companies and individuals to interact with bank balances directly through crypto wallets, DeFi protocols, and digital marketplaces. This move positions JPMorgan at the forefront of traditional asset tokenization, alongside giants like MasterCard, which is developing regulated stablecoin payment solutions, Citigroup, exploring real-time settlements with deposit tokens, and PayPal, with its PYUSD stablecoin already integrated into millions of user accounts. However, JPMorgan stands apart due to its institutional scale. The bank manages over $3.8 trillion in deposits. Even a small tokenized fraction would have systemic impact. Moreover, this initiative underscores the banking sector's shifting stance toward blockchain. Where institutions once viewed the technology as a threat, they now see it as an essential tool for modernization. Tokenization doesn't destroy banks, it redefines their role, transforming them from static custodians of value into dynamic platforms for digital financial services. It's worth noting that JPM Coin is not available to the general public at least not yet. It is currently offered exclusively to qualified institutional clients, such as large corporations and financial partners, ensuring regulatory control and risk mitigation. However, this model could serve as a blueprint for future regulated bank-issued stablecoins, opening the door to a new generation of digital currencies, both private and sovereign, that coexist within a hybrid financial ecosystem. In summary, the launch of JPM Coin on Base is not just a technological milestone, it's a sign that the next financial revolution won't come from outside the system, but from within it. Banks like JPMorgan aren't resisting decentralization. They're absorbing its innovations to lead the next era of money. And in this new paradigm, a bank deposit is no longer just a number on a statement. It becomes a liquid, intelligent, and globally interoperable asset, exactly as the future demands.